Good morning, traders. It's 8:03 a.m. Chicago time on Wednesday, the 15th of September, 2021. Yes, I'm aware there's some weird thing going on with the cover image. This is a YouTube issue. It's not accepting the cover image today. Whatever. Woke up on the wrong side of the bed or whatever it has. In any case, this is episode number 2073. Hopefully, you hear me loud and clear. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is the static version of the pre-market summary sheet. This snapshot was taken just a couple minutes ago, right before the launch of the broadcast. Key things to take away today. Overall, mixed risk posture. This morning, we have the S&P basically trading sideways at 44, 41.75 right now, up 16 basis points. A Dow up 6 basis points, 21 basis points for the NASDAQ, 10 for the Russell. The Euro Stoxx 50 off 41 basis points. It's the weakest. And the DAX is basically unchanged on the day. And so that's where we stand. Crude oil continues on its walk up. It's been stair-stepping up since last Friday and continues to do so. It's above the $70 mark and continues to trend up. Metals off. Copper's seeing a little bit of relief today. And the treasuries are off slightly this morning. As far as what's out there in terms of news, chatter, and so on across multiple networks and sources, the key elements I was able to pick off for this morning. Again, there's a surge in COVID cases in China, which is expected to bring on very tough measures to curtail it. And it's expected to have an impact, again, on supply and so on. There's also a lot of chatter about China's crackdown on various industries, the latest being the gaming industry in Macau. Techs have seen some really rough times over there in China. And so that's been driving the Asian market over the last several days. And so that's where that stands. Also, input prices remain elevated, meaning commodities, the price of metal, of steel and aluminum has remained high. This impacts stocks like Peloton, canning stocks. Campbell Soup is the one that came across from the Wall Street Journal, and many, many, many others. Some of these costs are making their way into consumer prices. Consumer prices and yeah, sorry about that. I need to fix that tweet. It's a copy paste. It's not correct. I am quoting December. Thank you for that. In any case, these prices are being translated into inflation, and the market has jitters on these. Overall, again, the theme is macro overhang. Not much to say about micro. Equities are still, treading along, and individual stocks, IPOs continue, but overall, the macro overhang is quite large, and so we expect that rallies are likely to see a lot of resistance on the way up. Quoting December prices, not September. Okay, so as far as what's ahead, we have in about 7 minutes the industrial production number. Then we get crude oil, EIA crude oil inventories. At 10:30, ECB's lane at 11 Eastern, and then balanced trade out of Japan at 7:50, and a slew of Australian numbers at 9:30 p.m. Eastern U.S. time to wrap up. Today, the ES is balanced. which is a nice change because it's been in a multi-distribution. It's been in a multi-distribution for several days. Looks like a resting day so far as I can tell, looking at various inputs. Even the NASDAQ is showing a balanced day on top of the key middle distribution from yesterday. I'll give you a quick look at that. The volume is pretty good, 184,000, but then again, the volume may be impacted by the roll. The manual roll shows up in these numbers. Overnight inventory is 79% long with 17.75 points of range. So the range is back to normal and the volume is normal. So that's what we're coming into today. The point of control is at 44.38 and a quarter. So that's where we stand this morning. A quick look, as quick as I can get it, a quick look at yesterday's plan. Given the break higher and given what we did overnight, again, the expectation would have been for a break of the prior high and therefore a climb back into the 44.88 and potentially 44.90. That was the primary scenario yesterday, given where we were after the inflation numbers. But again, I'm proven wrong. This is 3 days in a row, not a common thing. I'm proven wrong again as sellers came into the market very early and ended up pushing down following scenario 2 and beyond. We ended up pushing down to this key MC point of control, 44.2875, which I talked about a week ago today, that this becomes a key price if the September contract breaks 45.10 or the December contract's equivalent's 45.01 or thereabouts, that we are likely to quickly drop into this 44.28 area. And we did yesterday. We ended up hovering around here as expected. So that's what happened. Somewhat of a scenario 2 yesterday. Did play this 56 quite a bit. And then gave it up. Here's what the action actually looked like versus what was expected. You could see it was an open auction in range in here. We got a very clean and clear swing up to 77 and a quarter and a drop into 70.75 on the open. And then we have this tight consolidation once it breaks into a second zipper, and then it just could not hang on anymore. And the short setup in this zipper for a quick run, and the run would have been to 56.57. Remember, the SOC for inflation, is 44.57 even. So that was the key target coming in. The secondary target was the settlement price, which was at 44.49 and a quarter, I think, and that's that would be the secondary target. The main target, however, for a short from around 70 or so is 44.57, 44.56, and that got accomplished. We break through, then we pull back again. I outlined yesterday that 56.57 area right here. We pull back to 55, consolidate. When the IB gets put in, we ultimately end up pushing the IB, pulling back, and then creating an additional run. This run here breaks the prior day's low, which is a surprise. I did not expect that. I am being too conservative with my range projections on the daily. The selling is very persistent, which we're not used to seeing. You kind of have to go with what has been working until it does not. And this action here over the last week is that action where you're starting to say, okay, well, something's changing, right? So we pushed through the prior day's low of 44.3450 by 3 ticks and make a run for the IB low before we continue lower, and we ultimately get that target down below, that the big the big 44.28 MC point of control. We ultimately get to the MC point of control, and what do? For those of you who got the webinar series I did in 2010 for charity, you recall that I talked in depth, and those of you who looked at, who have access to the webinar, the study hall at Convergent Trading about basic market structures in the auction, might recall that once we get into a high volume node like an MC point of control, we're likely to just whip around in there, and this is an area where we expect the market to stabilize its previously accepted prices coming in, and that area becomes a magnet and then traps price in that area. And that's a perfect textbook example of how an MC point of control holds price at bay. It's like a celestial gravity or something like that. And so we sat sideways below yesterday's low. So we ended up again with a lower high, lower low on the day session coming into yesterday, and you could see that it's a multi-distribution profile. And what we see, which is important here, is complete rejection. Look at the volume above the 56. 56 continues in play here. 56 continues in play, and we're going to be paying very, very close attention to that price as we see swift rejection of those prices up above, and then a triple distribution, a relatively thin triple distribution yesterday at the lower end of the range below 56. So the market is seeking and has successfully accepted lower prices as of yesterday. Here's what's happened since. This is today, the overnight session. The overnight session, as you notice, is very balanced. Very balanced. This is our first clue. We have pretty good balance into the overnight session. We are balancing below the point of control from yesterday, which is up here. So we have a low volume node, which is a neckline right there at the 46. The overnight high is at 48.50 at the 46, and we have basically dragged the point of control down in the overnight session and are accepting the lower distribution of the profile, and it's stabilizing. So we've put in a low of 44.3150. We retested, we went to 30.75, and we're back to where we are. And the additional thing that we didn't have coming into the prior sessions, if you look way back up here, you see at the top of the screen here, that's where we ended up. That's the last half-hour bar before the open, and you'll notice that even though it's in the point of control, the overnight point of control, it's well ahead of the full session VWAP, full session mid. Same here, the last half-hour bar, well ahead of the full session mid, full session VWAP, and then again here, well ahead of the full session mid, full session VWAP. And that's why coming into those sessions, I was warning that there's likely to be some action as it is stretched, and there's some price discovery going on that's likely to carry into the day session as we open. And that was true. Yesterday, same idea. We're opening at the upper end of the range, and we are well ahead of the full session VWAP, full session mid. Well, guess what? Today is the first day where that comes to an end. We have full session mid, full session VWAP right on top of the overnight point of control in a Gaussian distribution, or in an evenly distributed profile. So immediately we know the context is changing somewhat, and we need to adjust our expectations coming in. So coming in here, we know that the market is in balance. We know that volume is in line. We know that the range is in line, and there's likely to be somewhat of a choppy open as both sides are accepting these prices, and it would take more energy. I always think of things in terms of physics. I'm a trained as an engineer, but there's likely to be more energy to make that push off the open given where we are now. Whereas when we have this disparity in the current prices versus VWAP and so on, especially the overnight point of control, there's more likely a snapback as people take profits. So we're accepting this here. We're looking for a choppy open, and so we're looking for a move away from here after a little bit of a setup. Now, balance leads to imbalance. We know that. That's what we expect, and that's what we've seen. However, coming into today, we may see both sides kind of holding to see what is likely, who's going to flinch before the move happens. This puts us in an odd situation in terms of our scenarios. It makes it harder to get a good idea of what's going on. What's going on here? Okay, I was looking at gold. Let's switch back to EC. Here we go. That's ES right now. And you can see very clearly here, peak out, break of the one-time framing down, resumption of a one-time framing down, and we're getting lower highs, lower lows in what is basically a channel here. And so it's really important for you as a trader to observe the prior highs are become an important tell. And in this case, the prior high here yesterday was at 77, I believe, 77 and a quarter. You got to pay attention to that. Notice where we are versus the prior bar. We're kind of hovering near yesterday's close at the lower end of the range, so we have not recovered much. But the recovery over the last couple of days has only resulted in more selling. So I do anticipate that the track is easier to the downside. However, we're in this 44, 27, 28 MC point of control. I'm expecting choppy action coming into today, right? This is where that MC point of control comes from. You see these 2 weeks where the VPOC is right on top of each other. This is a highly accepted price. I'm expecting a choppy open. Coming into today. It's just an expectation. It's not a prediction of the future. It's just an expectation. So you can see that things are being facilitated to the downside relatively easily. This can reverse. The market has snapped back pretty good. But in my opinion, this time around, and I'm not a bear, like a perma bear or anything like that, this time around, my expectation is that it is likely to have a hard time making a run for it as easily as it has in the past. There's likely to be rejection of higher prices, more so than what we've seen in the past where it just runs through. So the expectation is rallies are likely to be sold over, it'll eventually work through that. But right now, given the conditions, we expect rallies to be sold. So let's bring in our levels. We have this big, massive area here based on yesterday's action plus the MC point of control. We're trading right on top of it this morning, expecting a sideways open, expecting an attempt higher, and then I'm looking for it to go and test this weak low down here, move into the lower distribution, and then take out this low. I'm treating this as an impulsive day, another impulsive day, and I'm looking for it to push that low, not by very much. 44, 24, 50 tangle, make an attempt at the low, probably down to 20. Let's mark that. 20. Look for a higher low for the bounce. Scalp long back to 27, 28, 27, 28 for the rest, for the sideways resting period. This is a primary scenario. I've been predicting, based on the overnight action, the rallies into overnight, I've been predicting a rally into the open because that's what the market is telling me. Even though I've been wrong, I've got to stick with the plan. Now I'm looking at the market's pushing lower. Who knows what we'll get? Let's not let our mind play games with us and our expectations, but these scenarios are on the basis of context, not opinion. Secondary, open auction that tests down, gets into the 28, impulses up. So we're looking for some sort of an impulse, consolidate, take out the overnight high for the overnight stat, and then start working itself back up into the 56. So again, 56, 57 becomes the key target above. I don't see a catalyst in the news or whatever, and it may start to drive back up towards that 65 area where we battled over the last 2 days. Okay, that would be scenario 2. We have reached the 38. That was the price I circled and starred a week ago. Oh, the 28, 38 in September, 28 in December. We are still under the expiration effects, the rollover effects. The roll is about 98% done by my best estimate, but there's still effects of delta hedging and so on. And so we kind of have to experience that effect, but the volume metrics and the delta are more reliable as of this morning going forward. So we could start to go back to using order flow to figure out what this thing wants to do. Does that make sense? I know there's a lot that was communicated here in the last 22 minutes. Good luck today, and I'll catch you tomorrow morning. Don't forget to sign up for tomorrow's webinar with Jeff Snyder of Alhambra Partners. He's a global macro analyst, a very, very good one. We're going to talk inflation, Fed tapering, and what it all means to all of us. Good luck.